Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Alright, so hi guys, welcome again to the Greedy Trader channel. Good to see all of you guys here again. For those of you who are new to the channel, then you know that this is where we talk about all things market profile. So once again, if you're new to the channel, stick around. Right? I think it's very important to highlight to traders that there's one side of this business where people want to show you all the glamorous stuff about trading. They want to show you the Lamborghinis, they want to show you the 6-7 figure trades, or they want to show you the 5-figure trades in 5 minutes. And all of that is good. You know, I'm not going to take anything away from maybe a group of traders who amassed a lot of capital and they're able to do this stuff. But my experience, having been in this business now for well over 14 years, I can tell you, hands down, and I used to be a broker, I used to be an analyst, I've worked for pretty much top firms in the business. And with everything I've seen, there is really a small number of people who can make and do trades like that. When I say small number of people, I'm pretty sure that the vast majority of them are not on YouTube either. So, and that's because trading is hard, right? So you can't come into this business with rose-tinted glasses. I mean, most of us in the business, we just want to make a really good wage, like really good wage, so you literally don't have to walk into the office, and that's it. Most traders I know, right? So no one's actually driving Lamborghinis. I think the idea, most people in this business, they're looking for perfection, they're looking for a challenge, they're looking for financial freedom, they're looking for a way to get away from what is the obvious drudgery of today's modern society. And that's why they're in this. They're not in this because they think they're going to make 2 million in the next couple of months, right? They know there's a learning curve and the market is consistently changing. And that is what this channel is about. It's about making trading real, right? I always say this, it's about making trading real, because if you're going to go the distance, if you're going to do the decades in this business, then you have to have a general acceptance and gratitude for the market. You have to be able to say to yourself that I am grateful, right, for what the market has given me. And if you can say that, then you will spend a long time in this business and you're likely going to be successful, right? However you define success is entirely up to you, but you are going to be successful because you've learned to understand that the market gives everyone a gift, right? And it's largely a gift of other people's money, right? The people who want to follow the people who drive Lamborghinis and think they're going to drive Lamborghinis in the next 6 months, right? And those are the people, they're a gift to us as traders. They're a gift, because without them, there is no business. So I always say to traders, look, if you want to go and be those guys, fantastic, it's amazing. You are a gift, and we are totally gratitudeful. We offer the immense thank you for the gift of money you're about to give us. So I always implore you guys, look, think of this as a gift, right? Whatever you learn, whatever you hear, it's a gift. Now, I primarily on this channel, for those of you who are new, this is. For those of you who have been following me for a long time, this channel has been active since 2014, then this is just another video. But for those of you who are new, I focus here primarily on market profile, because we know that 90% of institutions use market profile. So that's our focus, guys, right? We've invested a lot of time and a lot of money developing our own market profile tool for MetaTrader, because it didn't exist on MetaTrader. And whilst we know that there are many other platforms that have market profile, like all the institutional ones, but once again, it's more cost effective for us to invest in our own trading tools, right? I am always happy to share this with traders who are interested. I run a free Discord server in the link below, and just check it out. Ask questions, feel free. It's a positive environment, and everyone in there wants to learn about trading. It is not there are no Lamborghinis in there, there are no dollar signs flashing. It's just hardcore trading, right? So if you're interested in that stuff, then check out the Discord link below. Today we're going to go through the assets. For those of you who haven't seen my previous videos, it might be handy at this stage to check some of those out and then see how we flowed through to where we are today, so you don't get lost in some of the stuff that we're going to talk about. Largely, for those of you who have been following me for a while, you're going to love this one. Okay, so let's kick it off with Aussie dollar. Now, what did we say last week? We did say again that we were expecting a bullish run on the Aussie. Again, we've broken those offers and now we're trading and we're bouncing on top. So who knows, we might be able to clear value up here. But again, we always talk about liquidity concepts, and one of the things that you got to understand is that we're now trading up liquidity and we can expect to break down at some point. We have a gap in value here, so this market is incredibly inefficient at this point in time. So once again, guys, this is where we stand with the Aussie. We are structurally bullish on this one, but we are expecting a dip, and again, just look for this market to pull back, so it becomes a good opportunity. A couple of value trades here as well. So again, like I said, we did say this, that from the moment we're trading these lows and we broke the lows, took on bids, started to gap up, broke the prior week's high. These are weekly profiles, and then we started to move higher, right? So perfect opportunity. Said to everyone, get long, right? And like I always say, just go back to the previous videos and see what we had to say about it. Again, we were structurally bullish on crude oil. I did say to you guys that my viewpoint had completely changed with crude, that I went from structurally bullish, can see the responsive bias here, to really a lot of uncertainty about crude, in that we could play a little lower and take out and sort of create a new liquidity low. So we hunt for liquidity and then move higher. So I was long on this for a couple of weeks, and you guys can see from the prior videos some of the P&Ls associated with that, but I was long from quite weeks, and I actually said to you guys that I am getting out because I'm just not comfortable anymore with crude, even though I'm long-term structurally bullish, but it just looks a little bit uncertain, and I was expecting that there could be another dip. So now you can see we're forming up, offers here, bids here, a lot of consolidation. Really and truly, this becomes interesting when we start to see some core structural development that is going to push us to the upside. We've already retested the prior week, so there's a lot of bids down here, so we might retest these, but again, I would suspect that we should start to look at the highs now, $74 crude, so a bit bullish on crude. I think we're still going to go up, but I just don't like the look of it. There's other things to trade, so we don't want to commit capital in a place where we're a bit scared. Again, with the S&P, expecting a lot of volatility come on Tuesday, and that's because we're opening inside value. Whenever that happens, we've got bid stacks here, we've got bid stacks here, gaps in value. We could easily get a big drop off the cliff for the S&P. So I'm really paying attention to this one. Now, we are structurally bullish on the S&P. We have been saying this for a while, but I think we're at the place now where we could start to see a lot of flow, and then this pushes the market significantly lower. There might even be a crash panic bell, and God, I won't want to switch on the media when this is going on. So I know there's some hell coming, right? And now we've opened inside value this week, and it's a holiday. So Tuesday, God knows what the market's going to open to, but we'll keep our eyes on open for that. Gold, again, we were structurally bullish on gold long term. Right. However, we've been rejected into this value coming in, so you can see the market's been held up by a prior week's value, and we keep retesting it and bouncing, right? So again, what we're looking for with this is we've got a J period of prints here. If we can trade up and break those highs, then there's a good chance we're going to test offers back at 2,000 an ounce, right? And we could possibly break higher. So I'm long-term bullish for gold, saying that look, there's still some more upside to do before we go lower. Now, again, if we look at this structurally, we're talking about the gap in value at 1,800. I am expecting gold to crush, literally crush. It's just where are we going to find that upside that starts to crush it to the downside, right? But for now, I'll remain structurally bullish on gold. Cable, again, structurally bullish, have been on cable for a while. I think we're reaching that point now where we might start to ease up, but once again, we're structurally bullish on cable. I would expect the gap to get filled somewhere between this week for sure. Normally we don't leave the gaps on currency for too long, so I'd watch out for that. It could make for an interesting downplay. Judging by the elongation of this profile, I would not be betting against cable right now, because again, as we know, we got minus development here, we got, you know, bid flow here. So again, these midpoints tend to stand on these. So even if we start to break down, it might be a few weeks of just literally consolidating around here. The chances we're going to make a big flow to the downside are very, very small. What I'm looking for is a fill of the gap, which is the inefficiency in the market. Dollar yen, structurally bullish. Been saying that for a long time anyway. We got a gap in value now, so again, expect that to be filled. We got one down here. Like with the currency markets, for sure, we're going to reach a cool-off point. But again, I think the yen is incredibly weak, so we are seeing a lot more flow to the upside. But I'm paying attention to that because these gaps need to get filled. So at some point, expect the dollar to drop quite heavily. Dollar CAD, we were structurally bearish on this one. We're at that support level that we were calling out, so we've finally traded down there. I would expect a rebound. I'll pay attention to the gap on the upside. So again, there's a good opportunity. We saw a similar case like this for the Aussie, and that's already played out. Bitcoin, well, goes without saying, 25k. Look, we even marked it out, like trading back into bids. And I said to everyone that I would be more interested in Bitcoin at 25k. Everyone saw the I period print and the rally, and they were like, oh, it's going up. But then again, we see the responsive seller in G period, and then we see the offers settle in, and then we start to break to the downside, and we're trading back for bids. I did say, look, we get down to these levels, 25k, I'm interested just on bids. And look, we've rallied now with 26,427. Right, so again, it's all about just playing the structure. I am long-term bullish on crypto just because I know that the major bull cycle is about to kick off. We normally start to see the makings of that sort of between sort of June and August, which is what I'm looking for this year. Is to see either we're going to get a big flash drop in June, August, which will allow us to get involved at incredibly lower prices. So that's kind of what I'm looking for with BTC. Sterling yen, I did say this, that it's the asset I was most bullish on for the entire year. I thought we were going to do so much numbers, and to quote you guys here, even though we are looking at gaps in this and we know they need to get filled, but I think that by the end of the year we can easily see sterling yen trading at 200 basically. So we're going to go to 200 GBP JPY. So that's kind of what I'm looking for with sterling yen. So again, I was incredibly bullish on this, even as we started to stack up of those bids at 172. And you know, again, you can go back to prior videos and check that out. So again, we got the Kiwi, and we got a gap down here. We're seeing a lot of weakness in the Kiwi. This was the one that we were most uncertain about. We really did think that we were not going to get much upside. We kind of capped this at offers, and already we're weakening. So I would expect us to take out the gap very shortly. So weaker Kiwi for sure. So we're coming into some dollar strength. So hopefully that kind of closes off how we look at things this week. I was very keen to sort of move on to something quite interesting, which is I was going to talk a lot more about some of the intra-week trades that we looked at. Right, so dollar yen, and this is going to be a bit of a teaching sort of portion of this, a sort of teaching session. So what we do have is, and this is what I always bring traders' attention to, right? So think about where we're trading now, right, with dollar yen, right? So again, we're long-term structurally bullish. We've already seen the macro, so nothing new here. Now the trades I always tell traders to watch out for. So you can see this market, we've risen, right? And we can see all the activity here. None of this signals a trade. What we really want to see is a push up. We want to see this kind of build up, and then we want to see higher highs, right? Higher lows, and then we want to see a break of that, right? So that's important. So what's that telling us? That we've got offers stacking, market trying to break lower in what we consider to be a macro structural long-term picture. And I'm going to be putting out a course that is going to tell you step by step how you build your trading business and how you're going to put your strategies together so that structurally you know how to structure a trade for the macro, and you know how to position against that on a week-to-week basis, which is going to give you income over time. Now again, we do a lot of things here. For example, I sell option premium as a more guaranteed way to generate income in addition to leverage trading, right? So again, for me, it's about having a holistic approach to trading where you know where your bread is buttered, and then you know that leverage trading is more of a supplement to that, so you don't trade too big, right? So you can balance it out and then look at it all as revenue from different segments of your business, and then you put it together and see which segment's performing more, and wherever's performing more, that's where you want to allocate more capital, right? So that's kind of just basic sort of business 101, right? So there's no reason why you should treat trading any different, right? So again, if you look at what we're trading now, this is interesting. So I'm bringing this up now so people can take a look at this. So what we're seeing here is, one, we've posted that we've acted like we're going up, but really this is offer stacking, so buyers being absorbed, and then we've come down to test the low side, but again we're trading against some minor bids, right? If you look, there's not a lot holding this market up at this point, right? So what are we seeing? We're seeing now we're breaking against these early offers. So what we want to do, these are 4-hour profiles, right? So again, talking about market segmentation, one of the things that market profile allows us to do is to segment our marketplace, right? Now, a lot of you guys might not know anything about segmenting, right, in terms of data analysis, but one of the things, market profile is a massive data tool. Now, I run a podcast, Diary of Trader, on Apple, so you guys can search it out. But I run a podcast and I've interviewed some of the best traders in the world. And one of the guys I was talking to, which that episode is about to get published, but one of the guys I was talking to was Stephen B. Hawkins, who actually has done a lot of work in this field. But most importantly, the guy I was talking about was Chris Cady, who's also really good pals with Stephen. But these are really top end traders, right? Top of the line. I mean, Stephen Hawkins is the guy who invented the market profile, the whole ideology around it. So he's just super smart. And you know, one of the things we were talking about is how AI has been used a lot in the financial space, long before we have the conversation about AI now, as a predictive model. So there's some amazing work going on behind the scenes where AI is predicting where prices are going to be using data models that have been derived from things like market profile, in other words, segmented markets. So there's a lot of work going into this field. So we're going to start seeing more and more of market profile behind the scenes. And obviously, if you, as a trader, you're listening to this now, then you know what you're supposed to be doing is figuring out how you can start using this and understanding this. But anyway, my point is that I'm going to be structuring a course together in terms of how we start to structure things in such a way where statistically we start to understand what we're seeing, right? So I like to see this build up here of offers, break lower, right? Now, a lot of traders are going to be short here. Now, that would be my recommendation, is you'd want to be short here. And if you're going to risk manage against this, then what you're really looking for is to see where we close this session. So if we look at, this is the 2 p.m. UK time, that is, session, which means that this concludes at 6 p.m. right? So in the next hour, this session is going to settle. Now, what do you think happens if we start to break above offers, right? Just think about it for a second. What do you think starts to happen? It's what we call forced liquidation. And that's what we talk about when we think about structure. Now, understanding the macro structure has allowed us to, even if we're going to get short, it has allowed us to risk manage and pivot very quickly when the market sentiment changes, right? Without having to think about it and so get steeped in the fact that we're wrong on the trade. Yes, we're wrong on the trade. You're going to be wrong at some points, but that's not the point. If you get into a position based on a technical sort of signal that you see, that's probably, and you know, doesn't matter how good a trader you are, you would perceive this to be offers stacking. Now, if the market starts to go lower, which it did, and takes out the low of where the offers are stacked, then you'll make the assumption that the sellers are in control and this market should go lower. But then if you have an idea about the macro picture, then you say, but hang on a second, the dollar has more to go against the yen, so that makes it structurally bullish. Now, if that's the case, then I might want to think about this short position. Maybe I want to sit it out, or I want to trade it more for a short-term window where we're probably looking for support at 141.58, for example. And If that doesn't happen and we start to reverse and then we settle, right, and then we start to open new prints on the next session, right? So that's why we segmented the market. So it doesn't have to be done on a daily profile or, you know, a weekly profile on those standard profiles. We can segment it into anything we want, 5-minute bars, 4-minute bars. We can even segment it by time at price, by volume if we prefer, right? So you just have to have more complex tools to do this. So if we settle and then we break, right, 141.91, and then we start to push higher, then we can start to work out other parameters like natural range, for example. So that gives us an idea of where we need to stay in or get out, because now we're trading into no man's land, right? There's no prior reference data for me to say, well, this is value high. It's basically the market has gone parabolic, right? It's a lot of inefficient prices at this point. So now you're trading the top of the market, right? There's a lot of liquidity here, strangely enough. I mean, traders always going to be wrong, right? So again, if we start a break, then we can start to predict 142, right? Natural range. We start thinking about range of structure over how many weeks this is likely to occur, right? And so on. But we know this is the top of the market, so we can position long, and then that allows us to exit our short trade and prepare for liftoff, right? So that's some of the kind of opportunities we're looking at. Now, if we look at some similar examples here, just so that you can see this in action. So here we can see gap in value needs to be filled, bids down here, big parabolic move, and then we see some offer stacking, right? We can see that within that session, and then we start to punch lower, balance break, we tested an M period, point of control, break down, and then we take out the low of the session. Now, value trades right ahead of us. Yes, we have some bids here, but these are late buyers. They almost always get wiped out, right? So here we get a big drop, no rejection, we continue lower. So your short should have been here to start with, and then you can decide how you want to push and risk. Right, as you move, you can trail. At this point, risk should be sitting above M period roughly, and that allows you to kind of guide this market into the market inefficiency gap. Now, some traders will start to take partials, right? 140.58, start to cover that trade, right? Again, if you are confident, right, when you see gaps in value and the market's making a strong play for them, you want to give it some room, right? So again, you could trade for the lows and then you cover your trade entirely and get out of that market, because what do we see starts to happen in the gap? Right, so the moment we trade out the gap, we start to see bids coming in, right? So the market is finding a bid. Now, of course, we're going to get that flush. So climax, liquidity hunt, back into strong bids, and then we get a strong move to the upside, right? Now, we don't want to chase this market. A lot of traders, this is it. They want to chase. They're late on the trade. We're looking for a similar setup, and that's why up here, we start to explore what's possible. Now, we see a similar example as we go higher highs, and then some offer stacking, and then we break the lows. We push. So if you go short, for example, you're looking to push, but then again, you can see elongated profile, you know, a lot of bids, midpoint trade, maximum. So again, this could be a short-winded move where you just scalp it. But again, yes, you can see there's the risk reward isn't there, but you could start scalp it, be grateful, take money out of the market. For me, the real opportunity lies, again, if we start moving to the upside, then we look for a break, and we want to trade that long because it means we'll get an extension, right? We can see this behavior on several different asset classes. We can observe that in cable, for example, and it's just the way the market works, and we have to learn to kind of position against it. So again, just to show you how we traded from the low, similar example, we went up, bids, stack, break to the lower, upside, A period, capture value, cover the trade. Right, wait, we get here, we do lower lows, we respond to the E period print, we don't quite fill the gap, we make to the upside. So again, lower lows, bid stacking, boom, close, bid stacking. Positioning, we could go long straight away on the A period break, or wait to get bids back into the point of control. And then now you wait. We go up, close higher, bid stacking. It's telling you buyers are taking the bait. You can see here where the last sellers intervened, more than likely. You can see we're closing above that. Big break to the upside, huge, right? And that's because we get all this mass liquidation from the people of the late shorts that you're seeing all over the place, right? Late shorts. We can see the big shorts here that took this, they covered, right? This was a scalp, right? Very quick move, covered, right? We can see from the E period print, a responsive buyer stepped in. Now we're taking these levels, so it tells any trader at this point, this market is no longer a seller's market. No one is going to offer at this price. Impossible. 127's gone. We get a big move to the upside. Again, what do we say? We're structurally bullish on the pound. As a consequence, moves like this, we can get behind it. So hopefully you guys have enjoyed the video. I thought I'd make it a bit of a teaching session, but again, it gives you an idea. If you want to follow what I do, just check out my Discord server, as I said. And I will be putting out a major course that allows for structure. I already have a lot of content on this. And like I said, just check out the Discord server. Well, guys, till my next video, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April week. What do you think, Valentine?